Welcome to Coffee and Crypto with Lee and Jimmie. I am Lee Reiners, joined as always by Jimmie Lenz. Jimmie, you've survived orientation week.
I have
Congrats.
survived orientation week once again. It is it's getting a little bit harder each year. I have to tell you, it is getting a little
Why?
bit harder each year. Well, part of the problem is the not problem, but part of the situation is the classes are getting bigger and more
Yeah,
teachers involved and more students and
more
more of
more more cat
everything.
herding. Yeah.
Yeah, yeah, but it's
Okay.
fun. We took our picture this
I'm
morning.
glad it's that reason and not that like you were gonna say, oh, I'm just getting older and it's hard to keep up. So
No, no,
that's
it
good.
has
Okay,
nothing to do
good.
with it. There's more moving parts, more moving parts. And honestly, we are expecting more out of the students every year. They had a graded assignment this morning and during orientation. Where other people are doing donut decorating, we're doing linear
Donut
regressions.
decorating. Oh my gosh, really? Well, the classes haven't even started. Where's
I,
this grade? Where's this grade going?
it goes to their one of their grades. It will be accredited to one of their grades that of a required class they take in the first semester.
Wow.
Yeah,
Okay. Putting them on the spot early. All right. Good
they
for you.
you
Holding them
know what
accountable out of the
well,
gate.
that you have to set a tone. This is the tone, folks.
Oh man, I like it.
Yeah,
Drill sergeant. Yes, sir. Yes, sir, Miss Professor Lenz. Uh,
it's great that it's really cool this year. We have a wide distribution of students. I mean, we got students from all over the world. We really do. I say that all the time, but we really do. I think they're from. I think I saw 12 countries
okay.
this year,
Wow.
which is really
Wow.
nice.
Very
Yeah.
diverse, international. Well, yeah, congrats about that and the continued growth of the program, and obviously best of luck for the semester ahead because
Yeah. Thank you.
you and I start teaching. What
You and
are you
you
teaching?
too. Next
Yeah,
week.
so we start teaching next week, so definitely looking forward to being back in the classroom. A couple of updates before we get into the substance today, Jimmie. First, digital assets at Duke is ramping up. We're going to be talking a lot more about it over the coming weeks. Just want to put it on folks' calendars. Okay, February 4th through 6th, 2026, here in Durham, North Carolina. And if you're interested in having your organization sponsor, or even if you're interested in speaking, shoot us an email. Right, we're always brainstorming, always looking to partner. Bring in new voices, new firms. Send us an email, either Jimmie or I, and we'd love to chat with you.
We are
Uh,
always willing to chat with people about
yeah,
this. I mean, it's always fun. But the conference is getting bigger, which is good. We are
bigger is
I think
better.
experiencing really good growth, and I think a lot of that is what people have always said about the conference is this is one of those conferences that you can't miss. It has always attracted a very different kind of very different
Mhm.
group of people,
Yeah.
and because of that, I mean, people are just like all over it. It's been great.
It's been awesome. And one of the fun things about it, Jimmie, is we have all these conversations with different people from different firms, leading up to the conference, right?
Yeah.
And we just get to hear about so many like interesting things that these companies are doing in the digital asset space. And these are companies that many people do not think of as being involved in crypto or digital assets, right? So
Yeah.
it really kind of hammers home for me, at least, just how growing, how fast things are growing here
Yep.
in this space, and how many sort of new entrants there are. Not necessarily startups, right? But kind of established firms getting into this as well. So that's always interesting to learn about. Okay,
Oh yeah.
other announcement, Jimmie, is so as part of this year's conference, we are trying to improve our marketing skills. Now, neither Jimmie or I, if you know us, this is quite obvious, are experts at marketing. So we've engaged some real pros to help us out, and they told us, look, if you have a podcast, you got to be on YouTube, right? Everyone's on YouTube. Actually, YouTube, Jimmie, is where more people consume podcasts than any other platform, right?
Really.
So it's yes, people love the visual medium, okay? And look, if you're listening to us, I get it. We're two handsome dudes after all, right? So
We
who wouldn't
are.
want to look at us chatting? So with that said, we are now on YouTube. Okay, we have a YouTube channel, Coffee and Crypto with Lee and Jimmie. It's the ampersand sign, and just type it into the YouTube search, and you'll be able to find us. So we are now going to be posting videos of our conversations each week. So we have the first one from last week. This is a bit trial and error here, right? So
So this means we
um,
can't wear our pajamas anymore, right?
no pajamas. Yeah, we have to wear shirts.
We have to wear shirts.
Unfortunately, cover up your prison tattoos.
Yeah, I'll have
And
to do that.
so yeah,
When that
but yeah,
happens.
we do. We are on YouTube, and we'll put a link to the YouTube channel in the show notes. So if you're still listening on Apple Podcasts or Spotify, you can go there to find the link to YouTube. And so with that, Jimmie, I want to come back to the substance for this week. But first, a note on last week's show. So remember last week we touched on how stablecoin issuers are now starting to launch or planning to launch their own layer one blockchains,
Yes,
right?
we talked about that quite a bit.
And you and I both said we don't get it, right? We just don't really understand it
Don't
because the
understand what
whole
the
point is
driver was there. Yeah,
because stable coins are supposed to be a settlement asset in the crypto ecosystem, and that requires there to be more than one asset on the chain, right?
right.
So we don't get it. So I got a feedback from a listener who wants to be anonymous, but he said, look, these are targeted at least Circle's new chain, which is called ARC, is targeted at business to business companies that can't use a non-whitelisted public chain. Okay. So
Okay.
it probably won't ever be as big as Ethereum or Solana, but there could still be a lot of activity with its B2B user partners, right?
Right.
So I think that is an important point that we
That's a
left
good
out
point.
of our and we asked people to give us feedback, right, if we were missing something. So I think it was important to bring that up.
No, it is. It's people. I don't think people realize how often we people reach out to us, and you and I will reflect that. We either make comments on it, or always good, and or we just don't comment at all.
Yeah,
But we do try to take that as just another voice in the conversation. And if you know anything about Lee and I, we're always open to hearing other opinions.
that's right. We are. That's the
We
whole point of our podcast. We have
it
different
is
opinions. Yeah.
other opinions. I mean, the conference, that's really what it is.
Yeah.
Here, get a room full of different opinions.
That's right. That's right.
Best way to learn.
So thank you to that listener. Keep the comments coming, everyone.
Yeah,
all right, Jimmie.
absolutely.
So let's move into today's agenda items. I sent you a bunch of links, and I'm sure we won't have time to get through all of them. But first, I want to touch on money laundering, some compliance issues. Right, everyone's sexy topic of choice here.
Yeah.
But look, the trend obviously is institutional adoption, TradFi getting into this space. One of the hurdles that's prevented them from getting into crypto in a meaningful way was concerns around money laundering, terrorist financing, and being on the right side of compliance with, the BSA and other laws governing money laundering in the U.S., right? And that's still a concern, frankly. I mean, that hasn't really gone away.
No.
Certainly, I think some of the guidance and statements being put out by the Trump administration and senior regulators within the Trump administration have alleviated some of those concerns. But, if you read the Genius Act, if you read Clarity, there's sections in there on, addressing money laundering. And frankly, they don't really know the right way to go about it or what to do yet. So there's all these studies,
Right.
we haven't really talked about that yet. But if you read Genius, if you read Clarity, it calls for all these various studies in a variety of contexts. But
and that's pretty normal. I mean, when you have something that's very pioneering. People probably don't remember, but when Dodd-Frank first came out, I mean, there were a million studies that were associated with it. Every time a big, in particular, something like this that is very precedent-setting, it's the first of its kind. You have a lot of associated, and you have to have context. Otherwise, they're making laws, they're making regulations that have no context, and legislators need those.
Yeah, exactly. So this is an area that is very much unsettled, right? And we kind of touched on it a little bit in the context of the Roman Storm criminal trial, right? But into this void, you're seeing new ideas come, and one of them that I want to talk about now is from the BIS, and we talk about the BIS quite a lot actually on this podcast,
Right.
probably more so than most other podcasts. And look, they put out a lot of interesting things. Sometimes we agree with it. Sometimes we don't. Sometimes you and I will
Sometimes we
disagree
disagree.
on the merits of what they put out. But nonetheless, I still appreciate the fact that they're making an effort here
Sure.
and thinking outside the box in some cases. And so they put out a I don't want to call it a report really. It was kind of just a short paper on exploring new anti-money laundering approaches for crypto assets, right? And of course, they start off by acknowledging the fundamental problem, which we all, I think everyone who listens knows well, which is that existing standards for AML compliance uh, for crypto assets attempt to apply traditional intermediary-based principles,
Yeah.
right? And the whole point of crypto is that, well, there's in a lot of cases there's not an intermediary, right, that can comply
Often.
often. So, what do you do then? Well, in this paper they kind of lean into the core properties of blockchain, which is that the entire transaction history is visible to
It is.
everyone,
Yeah. Very
right?
traceable. Very
Very,
traceable.
very traceable. And so you can identify, addresses or in the Bitcoin context, specific transactions, right, in the form of unspent transaction
Right.
outputs, right, to illicit activity, right? So let's say law enforcement or, one of the blockchain analytics companies, it sort of ties illicit activity to a specific transaction or address, right? That can get
I mean, our
flagged.
good friend Ari Redboard's company, TRM. This is what they
Beacon
do.
Chain, Beacon Chain. They had a big
Yeah.
announcement this week.
Yep.
Hats off to Ari and the whole team there. So this is a huge new initiative.
Sure.
So basically, the BIS has this idea of, well, look, you can attach scores to a specific transaction or address. Um, and then you can sort of have that score be a threshold for AML compliance at the point of cash out to fiat.
Hmm.
Right. So we still live in a fiat currency world.
We absolutely do.
Bad actors who, do bad things on the blockchain or are using the blockchain to move their illicit proceeds at some point are going to need to cash out, right? Typically at a cryptocurrency exchange. And right now, those exchanges are the ones that are doing the AML compliance, the KYC checks. And so, what if there was a sort of a score attached to given addresses
To a certain address.
a certain
The
address or a
thing
given
I mean,
transaction, and
addresses.
then you could have, and then you could say, okay, look, beyond this level, um, if it's above, let's say 100 is the best. 100 means it's perfectly clean. It's never touched a bad address, right? Then, go ahead, facilitate the cash out. But if it's below a certain threshold, then you can say no or maybe do due diligence.
I mean, the problem with that is the application, because I can open a new wallet in 5 minutes,
Yeah,
and it's a brand new clean address. So I mean,
but that's good.
yeah, I mean, it's a super clean address. Nothing's ever happened to it, but I could have 100 of those, right? And I could have done bad stuff with the other 99. I'm not saying this isn't a worthwhile thing to do, but I want to give people I want to set a certain ground level here, because I mean, if you look at like the largest AML BSA fines probably in the last year, I mean, you have companies like Block, which is Square, but Block was had a big fine. Our friends at Robinhood, big fine, and that wasn't too long ago. That was FINRA and then the company that keeps on giving, Credit Suisse.
Hmm.
But you're just seeing these kinds of things with these very traditional places that have been around a long time. And I know I've said it before, and I'm not meaning that it shouldn't be done, and it's not worthwhile to do this. I'm just saying nobody seems to have a lock on how to do this well.
Oh no.
Because there are so many fines that are being given out. There are so many fines that we see on companies that this is what they do for a living. And they're still having problems.
Yeah, I think you're right, and obviously some of the largest fines in financial history, involve money laundering,
Yeah.
right? I mean, you would think, oh, it'd have to be related to like some of the shenanigans leading up to 2008, involving subprime and whatnot. Nope, not the case. It's
No.
actually money laundering violations. In most cases, though, I mean, it's because these entities failed to actually have a money laundering program.
Hmm.
And as a result, they obviously facilitated bad things, and those are always kind of highlighted in the press releases.
Right.
Um, but in the crypto context, like I think it's probably a matter of time before we start to see some of those fines, frankly. And and the blockchain is unique, right? I mean, that's the whole point here.
Blockchain's really unique
And you're
because,
right
as we
about
were talking about,
the
it's
unhosted
transparent.
wallets. Yeah, and that's the issue, right? Is like, look, once claims move to unhosted wallets on permissionless blockchain, then then any subsequent transactions after that are out of reach,
Yeah.
right? From any type of regulatory intervention. Okay, so that there's just nothing that can be done at that point in time. I mean, you can have an exchange with the most stringent AML KYC requirements in the world, but once I buy my crypto on that exchange and I move it into an unhosted wallet, all bets are off,
All
right?
bets are off. I mean,
And so I think
folks, but remember, folks, and this isn't something that's relegated only to the digital world, right? I can put $500 in my wallet and in cash, and they can do whatever I want with it, and nobody's ever going to know.
Fair enough. You can put $500 million. You can put $500 in your wallet, but you couldn't fit $500 million in your wallet, right?
No,
But
I'd have to put that into a shipping crate and send it someplace.
Exactly, but you can put $500 million quite easily into a crypto wallet, right?
You could.
So there's so anyway, take a look, folks. I mean, I don't want to get too into the weeds here, because it talks, the paper actually talks about the Bitcoin blockchain is a bit different because it operates via unspent transaction output,
right.
So you can actually trace every single Bitcoin, right? Whereas, in other chains, especially stablecoins, because stablecoins are the main mechanism through which illicit finance is conducted on chain. It's an account-based model, right?
Yep.
So, they're fungible. You can't identify one stablecoin from another, right? One USDC is the same as any other USDC, right?
Right.
But you can trace wallet addresses. So it's just an innovative method. One to consider because everyone's considering this right now and trying to figure out, look, as crypto grows, as it enters the mainstream, we got to wrap our head around what to do around illicit activity here. So we saw the announcement with TRM and Beacon, I think is the name of the new program.
Yeah.
Hats off to them, but we'll see. And maybe this will be incorporated into some of these programs going forward. All right, Jimmie, moving on to
similar, related, but not the same kind of activity.
And look, I have a feeling that you and I might agree on this one. So I'm curious to find out, but I really don't see any reason why Bitcoin ATM should be allowed to exist. Just full stop. There are many ways to get exposure to crypto. Exchanges are very easy to use and sign up for now. Obviously, you can get exposure via ETFs. We've talked about many times. Now there are crypto treasury companies popping up all over the place. So why do we need crypto ATMs? And I'm referring to a notice put out by FinCEN earlier this month. And it really just highlights a parade of horrors, frankly, around the use of crypto ATMs. They call them convertible virtual currency kiosks, KBC kiosks. I think Bitcoin or crypto ATMs.
They're just crypto ATMs.
They're just crypto ATMs. And so some stats to kind of set the stage for you here, Jimmie. According to the FBI, their Internet Crime Complaint Center, criminals engaged in fraud schemes often direct victims to use crypto ATMs to send payments under false pretenses. So in 2024, more than roughly 11,000 complaints were reported involving the use of these crypto ATMs, with losses involving these complaints totaling roughly $247 million. Now, obviously, that's underreported, right?
Sure.
I mean, I'm sure most probably victims are not reporting these. So the true scale of the damage is quite higher. I've heard a lot of stories. Actually, there's one in my uncle's his church. The treasurer of his church was scammed. It involved church funds, unfortunately. And she was directed to go to a nearby crypto ATM. I mean, these ATMs, Jimmie, they're located in poorer neighborhoods, right? Mostly in convenience stores, tobacco
a lot of convenience
shops,
stores,
things like places that are open 24/7. And to all of our listeners out there, if you're
Although
ever in
there
a
is actually
store,
one in the mall that's south of both both you and I.
well, geez, okay. Well, I mean, yeah, it's not just the sketchy parts, but
Yeah.
look, if you ever see someone that's over 40 in front of a crypto ATM, there's like a 90%, if not higher, chance that they are, being scammed, right in front of your eyes.
But I do
Um,
wonder how many people who are here from other countries here are using those as a way to send money home for no fees.
uh, there might be some. I mean, look, I'm sure there are some.
I mean,
I
I'll
don't, I
bet.
don't have data. I don't have data
Yeah.
on that, of course, right? But it's pretty easy to get a wallet on your, just download your own wallet, man. The
Well,
fees on the fees on these ATMs are going to be higher than what you get on Coinbase or anything like that.
I don't know. I've never used one. Honestly, I've never used one. I've seen them. I remember when they were really novel and they were popping up. But I mean, I could see. I am very dubious of the people using them. Yeah. I mean, for the most part, that probably is sketchy
Yeah.
stuff.
I mean,
Uh,
this notice, it just has like a whole bunch of case studies that are just really, I mean, they're sad. I mean, they're really sad,
yeah.
frankly. People just losing their life
I
savings through these
I
things.
I
So,
saw those. I've told you
so
stories about when I
yeah,
was at Wells, seniors getting scammed, romance scams, and lottery scams, and all kinds of things like
it's
this.
bad news, dude.
Yeah, they're really bad news. I actually received one. I was going to post it, and I never did. But somebody who sent me a letter. This is quite a while ago, asking for Bitcoin in payment. Otherwise, they were going to unmask me as this terrible person. It's like everybody knows I'm a terrible person. You're not. You're
Yeah,
not. You're
exactly.
not.
Yeah,
You're not. There's not going to be any surprises here, folks.
yeah. Whew.
And so, but it was obvious that the guy was sending it out to everybody he could, anybody and
Oh yeah.
everybody, and you only have to hit, what, 0.5%, and it makes it worthwhile
Oh yeah.
to do
For
these
sure.
kinds of things. So I could see these easily being used for those kinds of scams. Yeah, sure.
Yeah, it's and like obviously the whole point of our show is that you think crypto is great and the future of finance, and I think I'm skeptical slash think it's mostly BS, right? But I think no matter where you stand on the issues, like it's important to acknowledge the reality of what's happening, and this is happening,
Yeah.
right? And it's not good for the industry that it's happening,
Not
right?
good
And
for the
so
industry. It's not good for the individuals. It's not good to facilitate. When you see numbers like this, I mean, 11,000 isn't really that many in the big scheme of things. That's but as you said, it's probably massively underreported because
yeah,
people don't. I mean, it's funny. When I was when I was still in industry, we would look and see how many people were reporting these kinds of things, and you just guess kind of how many cases are there actually.
yeah,
I mean, and it was vastly, vastly higher than what
hmm
were actually reported because people get embarrassed. Sometimes they don't know. All kinds
yeah,
of things happen.
yeah. And like, look, sometimes you read these stories and you're just like, and there can be, and I'm guilty of it too, where you kind of blame the victim a little bit, where you say, "Oh gosh, how stupid can you
How could
be?"
you not have figured that out? Yeah.
But we're different, I mean, we live in this world, we're relatively financially sophisticated, but that's not everyone, right?
I mean, the
Uh,
number of
uh,
people that fell
yeah,
for romance scams and
yeah,
lottery scams every month. I mean, you would think, who could fall for the Nigerian prince?
yeah.
People still fall for the Nigerian prince.
So here's one of the stories, okay? So there was a victim using her computer when a pop-up window appeared, advising her to call for help because her computer had been hacked. She made the call. She was transferred to a series of co-conspirators pretending to work in tech support, who told her to download software on her computer. She was also told her personal identifying and bank account information were compromised. And subsequently, she was referred to co-conspirators posing as employees from her financial institutions. She was then told she needed to secure her assets, and at the direction of someone posing as a bank employee, she deposited approximately $55,000 into a crypto ATM in San Diego, and then that led to additional scamming, ultimately leading to her losing her life savings of $1.5 million. So,
Wow.
I mean, it's just yeah, heartbreaking
Really
stories.
sad.
Look, why is this like a FinCEN thing? I mean, FinCEN is not in the business of offering these sob stories, right? The bottom line is that these ATMs are money services businesses, right? They have to register with FinCEN. They have to have,
Hmm.
a money laundering program. They have to file SARs, and many of them are. So why FinCEN put it out there. But I just thought it was interesting. All right, Jimmy, let's
I
move
do
on
have
to
to
some.
ask though, in those kinds of cases, I mean, one of the things that I try to do, and I actually have, I've written on this, and I have a patent for a system for, monitoring account behavior and things like
Oh,
that.
yeah. Oh, yeah,
It,
that's right.
yeah. And so, why didn't the bank ask, hey, this has been a customer
Yeah,
here for 40
yeah.
years. You've taken $1.5 million out basically in cash. How do you not ask the question?
Yeah, the Wall Street Journal had a great article on this too recently because there was a woman in like Kansas whose like husband had gotten scammed out of a lot of money, and she was suing the bank, I think, for not, or the brokerage, his like wealth manager for not stopping it. Yeah, I think we gotta think hard about liability in these cases here. But it's hard. I mean, look, the whole point from the bank standpoint, they're saying, look, we asked him questions, right? We in some cases, bank employees literally told them, we think you're being scammed,
Yeah.
right? Um, but if they're complying with all the other, protocols and regulations, what are you going to do? Like physically restrain the person from sending the wire, or
Call Adult
say,
Protective Services.
yeah, yeah, that's true.
That's
It's a
what you
good
do. I
point.
mean, I've called Adult Protective Services more than
That's
once.
true. That's true.
Um,
Yeah, I think we got to think about this some more. We meaning like policymakers, because I
yeah.
do think there's got to be a bigger role for
Maybe
banks.
you and
And
I. Maybe you and I
yeah,
should be the people that
let's
are
do
thinking
it.
about
Let's
this.
do it.
I
Yeah.
think,
Well, I know, in your not to get personal, but I know you've been dealing with your mom's affairs here, and
yeah,
I'm sure this is something that you think about.
I
Um,
absolutely.
so, all right. Well, moving on to happier news here. Big
Yeah.
week out in Wyoming, Jimmy. Right. Um, and obviously it's the Jackson Hole Conference, the annual conference hosted by the Kansas City Fed. That
Yep.
was the highlight here, and Jay Powell gave his speech today. So it sounds like we're probably in for a rate cut in September here.
Looks like it.
But leading up to that, our friend the Mooch, right, Anthony,
The Mooch.
co-hosted a crypto conference out in Wyoming, and so a lot of announcements came out of that conference, and a lot of high profile names from
Yeah, a lot of
DC
high
and
profile names.
elsewhere made the trek out there to talk. So we're not going to be able to hit on everything, but a few highlights. First, involving the Mooch and his fund Skybridge. So Skybridge is tokenizing shares in two of their funds. Okay.
Yeah.
So this is $300 million. They're tokenizing it on the Avalanche. They're going with a company called Tokeny. That does this. That's their business. Is they help companies tokenize assets and shares. So they're using the ERC 3643 token standard. You're probably more familiar with that
Yeah.
than I am, Jimmy. So this is two funds. I forget the names of the funds, but these are two funds that they are tokenizing shares in. Look, we're going to see more of this. I mean, I think we've seen some of this already.
Yeah.
I think KKR might have been like one of the first to tokenize shares in a fund. I am inclined to say this is more symbolism than anything meaningful, right? Because you still have to be an accredited investor. I just don't know what you would know better than I would, the demand to kind of buy and sell shares in, illiquid funds.
Yeah,
Is it
I mean,
there? I don't,
it's the liquidity. I probably receive up until, I would say, up until Genius Act passed. I probably received. I get a lot of calls like you do, from all kinds of different people, but I probably received as many calls about liquidity of different kinds of private assets as everything else combined for probably a year.
but
Um,
let's be clear. These calls are probably like, help me get out of this, right?
yeah, I mean, do you have ideas? These are from
Yeah.
institutions. Do
Yeah.
you have
Yeah.
ideas? Do you have thoughts about, liquidity for, private assets? Um,
Yeah.
and yeah, I mean, that's so liquidity is a big factor. The easier it is to trade these things, in particular among institutions, I think,
Mm-hmm.
because they're the only ones who really can own private assets for the most part. But I think the easier it is to do that, the more people that it can be made available to, the more liquidity that you have. And liquidity directly affects the price of things, right? There's something called
Yeah.
the illiquidity premium that you put on assets that can't easily be traded. And so shares in a private equity pool, those typically cannot be traded, right? But if you could tokenize those and you actually could trade them, you might actually have more price discovery. It would certainly probably improve liquidity and things like that. So there are economic and financial reasons to
Yeah.
increase the ability of different folks to participate in these kinds of
Yeah.
schemes.
Can I ask you something? And
Sure.
this is probably a long answer here, so feel free to punt on it or not. But in private markets, and this is sort of the Cliff Asness point, right? Where he's been kind of a critic of what he calls volatility laundering,
Right.
right? So PE managers, hedge funds. Well, hedge funds, I mean, if they're investing in public equities, the price is the price. But
Right.
at least in the PE context, the managers, don't have to mark to market, right?
Right.
And they can, kind of mark to make believe, as they say. To what extent will that have to change if you start tokenizing funds then, right? Because
Oh,
isn't the
yeah.
yeah, so like
Yeah,
like
so
what how does that
I think
change on the valuation side of the actual assets that the fund holds?
yeah. So if the assets start trading in a liquid type environment, absolutely, you would have to start marking those, and it would have to be reflective of the price that they're trading at. It could no longer just be, oh, I brought my accountant in here and he said this is worth X. If you have trades that are going on, because remember, folks, I mean, the way private equity works is, you buy into it usually over 5 years, the capital call period, and then you hold it for another 7 or 8 years. No
Yeah.
transaction. I mean, there is no trading out of these things, right? You're kind of locked in for 13 years total, or give or take about 13 years,
Yeah.
and then a liquidity event will take place. But there aren't a whole lot of ways to mark these assets really, besides an audit firm coming in and giving you a price on them. I'm sure there's some fundamental things and stuff like that, but for private companies, they don't report the same way. There are a lot of differences, and so I think it would necessitate firms, having to mark things to market, or at least to mark things to a more reasonable price based on which transactions are actually taking place.
Yeah, because that would obviously help with the liquidity of the tokenized shares.
Yeah.
Right? Because look, I mean, previously it didn't really matter other than for like maybe like LP like tax reporting purposes. And I'm not an expert in this stuff by any means here, but like you said, I mean, if you invested, you were locked up for the length of the fund, right?
Right.
And at the end of the fund, right, the general partner, the sponsor would then, liquidate the assets, and it's private equity. I mean, it's companies, right? It's whole companies by and large.
Right. Right.
So then they would either, the companies would either go public and there would be an exit event, or they would sell it to another PE fund, right? A secondary fund, a continuation fund, or something like that. And then you would return the cash to the original shareholders. So like whatever the value, like it wasn't that big of a deal if the managers were, kind of making up the value of the company in the meantime, because all that mattered was the liquidity at the end, right?
Right. I mean, there
But
there are tax and there are tax and accounting treatments that dictate a lot of this. Assets that are held for sale, for instance.
yeah, yeah,
Those kinds of things. I mean, that's kind of what protects different sorts of entities. I mean, this is why mortgages aren't mark to market, because if they were, there would be a hell of a
yeah.
lot of them underwater.
Okay.
But they're not. They're held, they're held in a different way, so they're not mark to market. So, if there are a lot of assets that are not mark to market for a number of different reasons.
Yeah.
In the case of private equity or private debt, there's very little to base it on besides an accounting or an audit firm. I
That's
mean,
what I'm saying. So if
yeah,
you're now
yeah,
buying a tokenized share of a private equity fund, you're going to be wondering, what the hell am I buying? Like, show me your marks. Like, what are the assets that the fund owns, and how do I know that they're worth what the fund is claiming they're worth?
yeah, yeah. I mean, I think certainly start to get price discovery, and you do in every market that starts to, the more liquidity there is, the more transparency there is, and the more people
Yeah.
are going to clamor for information about like you said, what's this really worth?
Yeah. Okay. Well, I think we're going to come back to this quite a bit in the year ahead here. Okay. Next story, Jimmie, out of Wyoming. Wyoming has now issued the state of Wyoming has
Yeah,
now issued their own stable coin, right? The Frontier Stable Token,
yeah,
ticker FRNT, will be backed by dollars and short-term treasuries. Obviously, we'll be tracking the dollar, one per one. The Wyoming Stable Token Commission is kind of the government entity behind this effort. It is not technically the issuer, so that is being done by Layer Zero.
Right.
And then the reserves backing Frontier token are going to be managed by Franklin Advisors. I think they're a subsidiary of Franklin Templeton, if I'm
I
not
think they are.
mistaken.
Yeah, they are part of Franklin Templeton.
And then there'll be monthly attestations as well. The stablecoin will be available on the Arbitrum, Avalanche, Base, Ethereum, Optimism, Polygon, and Solana blockchains. So
Right.
giddy up, cowboys! Go ahead and feast on your Wyoming stablecoin. I don't know. What are your thoughts here, Jimmie?
It's another stablecoin.
Yeah, I don't.
I
Yeah,
mean, if you want to,
much ado about nothing.
I kind of think so. I mean, it's I don't think there's anything super unique about it except that it's, being issued by a state. It's kind of like, your MasterCard saying Bank of America versus Cap One on the top. I mean, who cares?
Yeah, I'm kind of with you. This just seems like more marketing. Hey, look at us out in Wyoming. We're very pro crypto, and they've done, a number of different kind of crypto
I mean,
initiatives
it's
out
probably
there.
they're going to make some money off of it. The state's going to make some money off
Well,
of
that's
it
the
for
whole point. I
sure.
think it's going to fund education, right? I
Yeah.
mean, they're going to get the spread.
I love those things. It's going to fund education. Now, what we're the $100 million that's going to go to education. Yeah, we're going to take that away from the education budget and put it in something else.
Yeah, exactly.
So
Right.
it's kind
Money's
of like lottery,
yeah.
right?
I
The lottery
listened to
funds
the
education.
Yeah, well, and that's and poor people are the ones who buy the lottery
Yeah.
tickets, right? I did listen to the guy who's running this the Wyoming head of the Stable Token Commission, and he made some interesting points. And he said, one, they're not subject to the Genius Act because they're a sovereign entity, I guess. So the Genius provisions do not apply to them in his telling. I haven't, verified if that's true or not, which means that there is the potential for this stablecoin to pay yield, right? To pay interest, which would be, directly, which they haven't announced they're going to do yet. And by the way, it's not even available
I was going to say,
to retail users yet.
yeah.
And it's not as if you get it. I mean, you have to get it through like an exchange. You can't just go directly to the state of Wyoming to get it.
And they're
So
claiming
they could pay.
they're a sovereign entity. So
Yeah, well, I guess the way he said it, and he was the Crypto in America podcast, this second or third best crypto podcast. Obviously ours is first here.
ours is first.
But he said like, look, the prohibition on paying interest in Genius applies to like persons, and then he was like saying if you look at what like the legal definition of persons is, like it excludes states, I guess, in his telling. Again, I haven't vetted this claim or not, but this is what he's saying, and I'm sure he's, and lawyers have told him this. So that's what, that's, I guess, would be one potential difference maker for this
Yeah,
stablecoin.
I think I would find another law firm to get another opinion.
I don't know.
If that doesn't sound kosher at all.
Well, it'll be interesting to watch if this thing, because like, look, obviously standing something like this up costs, money, right?
Yeah.
So we'll see if it was worth the investment. Final story for the day, Jimmie, and this was a short one here. I think this was also, I don't think it was announced in Wyoming, but it was communicated or talked about certainly in Wyoming, which is the Federal Reserve Board has announced that it is sunsetting its novel activity supervision program. Okay, now this was a program that was stood up a few years ago under the Biden administration, designed to supervise banks who were engaging in, as the name implies, novel activities. What was a novel activity? Well, blockchain, digital assets, crypto was considered a novel activity. A lot of folks, kind of lump this into Operation Choke Point 2.0. I think that's nonsense. I certainly understood the reason for doing this at the time. I think you and I might have probably talked about it on the podcast.
We definitely have talked about it.
And my point was like, well, look, it's one thing to actually do this, but like to have this program, but do you have the people who know what the hell they're doing, know what they're looking at? Which I was kind of skeptical of, given that fact that I used to be one of these people. So now they're saying that they're just going to fold it into the normal supervisory process. That if you're a bank doing crypto stuff, you're not going to get, visited by a special team of examiners, right? It's just going to be part of your ongoing supervisory process. I mean, at this point, Jimmie, probably makes sense, frankly.
Oh, absolutely. Absolutely makes sense to do it. And you and I, we did talk about this. I mean, I remember talking about it when it first came out because we there were definitely cases where people were being held up for a number of different reasons. We have friends actually who got caught up in the choke point, And I think that, for, to have this wrapped in, I mean, to me, that was part of, the OCC's involvement in the Genius Act, and, some of the provisions, that were specific to banks. I mean, that's kind of what this is. So it should be part of the normal, review process. And as many
Yeah.
banks as, you see getting involved, issuing stablecoins, tokenizing deposits, that have, departments that are, working in this space, it kind of makes sense. I mean, this is, I don't want to say it's core to a lot of banks, but it's certainly becoming a important part of a lot of banks. So it should be
Yeah.
part of, and, honestly, when you break things out like this, you start treating them a little bit in a vacuum, and you should understand, what are the positive and negative correlations with things like this, in
Good
other
point.
parts of the
Yeah.
bank.
Yep, I agree. I mean, one of the points of launching a novel supervisory program from the supervisor standpoint is that it allows you as an institution to learn,
Yeah.
right? Well, you've had a couple of years, presumably you've learned, right? Now you can take that knowledge and incorporate it into your ongoing work. And as you said, integrate it with, other aspects of supervision and understanding how a bank, operates on a holistic level and how the pieces interrelate, right? So,
You'd hope so.
yeah, I mean, this was, obviously the crypto industry, they spin everything, right? But they spin this as like another retreat from Choke Point 2.0. I think the timing, like the
Probably
timing was intentional.
just maturing of the organization.
Yeah, I agree. All right, Jimmy. Well, we left some things,
We did leave a couple of things, but
for next week. So we'll touch
it's
on
always good
some
to do
crypto
that.
IPOs. The IPO market's heating up, and we want to touch on some recent
Well, I'll tell you what, the IPO market's
IPO.
heating up, and man, we have to give some warnings out there. Not just around, not around crypto, but
I don't know. Should we though? Like, I mean, I feel like maybe next week we
maybe
can have
heads
like
up.
we can have like a well, I was actually saying like a mea culpa, because man, we're like so far we've been dead wrong on the Circle IPO. Like we did that whole Circle IPO
Well,
special.
I did, or have we been? I mean, look at where it traded right after, and look
Yeah,
at where it's trading now.
yeah, but it's still higher than it's than what it is
It's still
IPO'd at.
higher, but I mean, I'm not going to talk about my trading strategies or anything, but
No, we don't do that. We don't do that.
but the one thing I will say, and I watch a lot of different assets, and I watch the derivatives that trade on them and things like that. For anybody who's interested in what the overall sentiment is, look at, and this is for any stock, doesn't really matter.
Mm-hmm.
If you want to see what the sentiment truly is, look at the premium on options. So if you find a stock that's trading at, right at the money, so say it's a stock that's trading at 100, look at the 100 calls and the 100 puts for the same expiration date, see if there's a premium on either one, because theoretically they should be trading at the same price. And look and see. In Circle,
so if you have two different stocks, you have two different stocks.
Same stock. So
the premium to what? The premium to
no. So what you do is you look at a stock, okay, and it's trading at $100, okay, exactly $100. You look at the $100 calls and the $100 puts of that stock, and you see, and they should be trading. They should be trading at pretty much the same price.
Oh,
right?
So you're saying the price of the call and
premium,
the price of the put.
Premium should be the same on the calls and the puts, pretty much. If they have the same expiration, look and see if there's a bigger premium on the calls. People think the stock's going to go up, so they're charging a little bit more for that, and vice versa on the puts. What do you think it is on Circle? What do you think?
Yeah,
is there a premium
on the puts? I would guess
significant.
But that could be a bad sign. We shouldn't talk about this because now all the Redditors, all the people online.
All people have to do is look.
I know, but you get the online hordes, trying to do a short. I mean, it's not a technical short, but it's the economic equivalent.
I have no position in the stock. I'll say that.
I know, but I'm just saying, if you point it out, then they'll think it's evil banks trying to take down Circle.
I can say this about
trying to take down crypto.
Okay. So you're right. Okay, so I'm gonna leave people with one more. Okay, and anybody can go out there and look at it. Go look at the S&P 500, the SPYs, the SPYs.
Okay. SPY.
Look at them. Okay, so this is a pretty damn broad index, right? Look at them out 12 months and see if there's a premium on the calls or the puts. They should be trading. This is a huge index, right? These should always trade at parity. They don't.
Okay.
All right. So I'm going to leave everybody with that. So go do your homework, everybody. Don't be lazy this weekend.
Look at you, Taskmaster. Semester has started. All right, Jimmie.
It has started.
Have a great weekend.
You too, Lee.